Hey everybody, I'm Logan Alec. I'm a CPA. I own Choice Tax Relief. Today we're answering a question. It's actually a very good question. The question is, if the IRS forgives tax debt in an offer in compromise, is that forgiven amount taxable to the taxpayer as cancellation of debt income? This is actually a good question. I went back and forth on this with a tax attorney the other day on Twitter. It started with me posting about how we got our biggest, penalty abatement for a client of 2024 so far. We got penalty abatement for about 66 grand. Somehow this evolved into a conversation about whether forgiven taxes or penalties or interest is taxable. Right. And so we went back and forth a while. Basically, it's like, regardless of whether a 1099 is issued, do you agree that, forgiven penalties, forgiven taxes, forgiven interest is income, right? If not excluded under something like an insolvency provision, which we'll talk about in a bit. And I basically had to explain why it's not taxable. And that is what I'm going to talk about today. Because I figured, hey, if even this tax attorney didn't really know this, chances are the good folks out there might be confused on this point as well. Why is this? Why might one think that forgiven taxes in an offer in compromise is taxable? The reason is because of Internal Revenue Code section 108, which I've pulled up right here. So Code section 108 says, it basically says that cancellation of debt income is taxable, right? If you get some debt forgiven, except in these 5 cases, okay? So these 5 cases right here. Sorry. The discharge occurs in a Title 11 bankruptcy case. The discharge occurs when the taxpayer is insolvent. The indebtedness discharge is qualified farm indebtedness. The debt is qualified real property business indebtedness. The indebtedness is qualified principal residence indebtedness, like the mortgage on the home where you live. Okay. And you'll note that in all these exclusions, right, these times when the tax law says that cancellation of debt income is not taxable income, missing from this list is forgiven tax debt. It doesn't say it's excluded here, right? So one may reasonably conclude, like I believe that my tax attorney friend on Twitter did, right? Do you agree that it's income if not excluded? Right, for example, under the insolvency exclusion or one of these other exclusions, one could reasonably conclude that, hey, just looking at this, it doesn't specifically exclude canceled tax debt from income. So, when the IRS forgives a tax debt and offer in compromise, that should be included as taxable income. Okay, but, and I knew I was going to say this, right? Because it's not that easy. We have a court case. Eagle Asbestos Packing Company versus United States. This was decided back in 1965. Okay. In this case, this corporation, Eagle Asbestos Packing. By the way, if you hear some ambient noise, that is my youngest child, who's 9 months old, who's on the ground at my feet. Anyway, Eagle Asbestos. In this case, Eagle Asbestos Corporation owed about $424,000 to the federal government. Okay, this was for tax years, I think it says it up here, 1943, 44, and 45. Okay, and this amount here, this 424,000, 68,000 of that was interest, right? The rest was just the underlying tax liability. Okay, and this corporation deducted this interest amount on its tax returns for 1948, 1949, the accrued interest to the IRS. Okay, it took that as a tax deduction on its tax returns. And then in 1949, the corporation Eagle Asbestos submitted an offer in compromise to the Bureau of Internal Revenue. Okay, and that's what the IRS kind of used to be called, right? Until I think it was the 60s or something when it started being known as the IRS, right? So it submitted this offer in compromise to the government. In 1951, the corporation was notified that the Attorney General of the United States had accepted the offer in compromise to settle the tax debt for $314,000, right? So this $424,000 was compromised out for $314,000, right? So basically 109,000 was written off. Okay. Fast forward 8 years to 1959, when a revenue agent from the Bureau of Internal Revenue audited Eagle Asbestos, the corporation's tax returns. Okay. And the revenue amount basically said that $68,000 of interest income here that the corporation had deducted, that interest income on its tax debt that had been, a lot of it had been written off, or maybe it would have been considered all of it had been written off in the offer and compromise. The revenue agent said, you got to include this interest that was settled out in the offer and compromise as income in 1951. Okay, the year that the offer and compromise was accepted. Okay. And so the corporation lost this audit. They paid the tax. Okay. They paid the tax, right? And the interest and all this stuff. And then they sued in the court of claims here for a refund of this amount because it believed that it shouldn't have had to pick up the $68,000 of forgiven interest on tax debt as income. Okay. So long story short, what did the court of claims rule? Okay. And we're going to skip to the bottom here. This is what the court of claims said. The effect of the compromise, the offer and compromise settlement itself, and the intentions of the parties in entering into it was to extinguish all tax liabilities included in the items making up the compromise. For the above reasons, we hold that plaintiff, being an accrual basis taxpayer, properly deducted the accrued interest of $68,000 in 1948, and that no part thereof can be considered to be income in the year 1951. The court of claims is basically saying, look, when the government accepted that offer and compromise, it was the intention of that, and it was everybody's understanding involved in that offer and compromise, that all tax liabilities connected with that offer were to be extinguished by that offer, right? And that the taxpayer, the corporation, in this case, Eagle Asbestos, would in no way should have to pay some additional tax on account of the offer and compromise. That's what the court of claims said, okay? Now, this is a very old court of claims case, right? This is from 1965. What is that? That's almost 60 years ago. Kind of shaky authority, right? However, the IRS itself, I'm going to pull this next document up here for y'all. The IRS itself has cited this case in specific advice that IRS Chief Counsel's office gave internally for why tax debt forgiven in an offer and compromise shouldn't be taxable. Okay, so let's fast forward. Let's see, when would this be? From 1965. Let's fast forward over 30 years. Okay, from that court of claims decision to 1998, actually 1997. Okay, so in 1997, the Ogden IRS branch here, see Ogden right here, asked the Salt Lake City Associate District Counsel, okay, Chief Counsel is IRS attorneys, okay, and they have different branches. They asked District Counsel, Associate District Counsel, a number of questions, including this one, and let me find it here. Should the IRS issue Forms 1099-C, that's the 1099 you get for cancellation of debt income, when canceling tax debt of individuals discharged in a bankruptcy case or as a result of an offer and compromise under Section 7122? That's the tax code section for offer and compromise. Okay? Salt Lake District Counsel did not know the answer, so they posed this question, among a few others, to the Assistant Chief Counsel office in Washington, D.C. And the Assistant Chief Counsel office produced this significant service center advice labeled 1998-39. And here's what this document says about this issue. Here's what IRS National Chief Counsel Office said. Okay? Cancellation of debt by the IRS. I'm just going to read this whole thing. Cancellation of a tax debt by means of an offer and compromise does not give rise to discharge of indebtedness income, and they cite the Eagle Asbestos case. The court in Eagle Asbestos concluded that a compromise of the interest portion of a tax debt did not give rise to income from the discharge of indebtedness because the effect of the compromise settlement itself, and this is the part I read, and the intentions of the parties in entering into it was to extinguish all tax liabilities included in the items making up the compromise. Such an intent could not be fulfilled if taxable income arose from the agreement. This rationale applies equally to cancellation of a tax debt itself, as well as interest on a tax debt. Therefore, no Form 1099-C is required to be issued. However, we note that if the IRS cancels a debt that is not a tax debt, the amount canceled is includable in discharge of indebtedness income, and a Form 1099-C should be issued. So there you have it, folks. Now, one thing I will say is that these SCA type things, right, they're originally intended to be like private, right? In no event shall it be disclosed to taxpayers or their representatives. At some point, it became like public, acknowledged significant advice, it may be disseminated. So these SCA things, they're not like the strongest authority necessarily, but I've never seen the IRS come in and try to say that, oh, that offer in compromise that, we got, you should have reported that as taxable income on your tax return. I've never seen that. The IRS hasn't even brought that up. So, this is IRS policy here. And basically, all of our clients that we do tax returns for, that we got offers in compromise for, we have never, put the offer in compromise, the amount forgiven, and the offer is taxable income. Oh, don't eat paper, baby. Come here. Come here. So yeah, so there you have it, folks. And this is Joan, by the way. This is Joan, the newest addition to the Alec family. That's it. So I have some other tax relief videos here on the left-hand side of the screen, probably going to cover Joan's little head. And then if you want to visit Choice Tax Relief, there should be a button popping up right here that can take you to our website. You can fill out the form. We'll reach out to you or give us a call, 866-8000-TAX. That's 866-8000-829. All right, folks. Thanks so much for watching. See you in the next video. Bye-bye.